Identifying support pivots. Being able to identify levels of support using pivots is an important skill in your ability to analyze a price chart. Support pivots provide clues about opportunities to buy a stock, as well as points at which weakness can be discovered. This segment will build on your understanding of candlestick analysis to include this critical skill. Support levels are always identified below a stock's current trading price. At some point in any price drop, buyers will inevitably decide that the price has reached a level that represents a good bargain. The stock is now cheaper than it should be. When this happens, the increase in buying momentum will halt the decline and the price will begin to go back up. Traders often make the mistake of reading a halt in a price's decline as the manifestation of support, only to see the stock resume its drop soon afterward. Support is identified as soon as the price begins to go up again, which is why we often use the term support pivots. The price halts a downward move, pivots, and then turns, or goes back up. For functional purposes, a bounce off of a support pivot is usually taken as an opportunity to buy a stock, while a price below a support pivot is seen as a signal to sell or go short. Make sure that when you are considering a trade based on support, however, that the direction of the trend agrees with the direction of your trade. Visually, support pivots can be identified in two ways: as a diagonal line, such as you see from a rising moving average line, or from previous price action, which produces horizontal lines below the current trading price. It is reasonable to use both types of support identification when analyzing a chart, since they are not exclusive. During any upward trend, the price will periodically drop or retrace back towards its trend line. A trend bounce is the first type of support bounce you should be familiar with, since it is usually followed by new price highs and an extension of the upward trend. In the same light, a price break below trend support is often the earliest sign of a reversal of the trend, which should be taken as a signal to exit any long positions you currently hold, as well as to consider shorting should the downward trend actually develop. Moving averages are available from most charting platforms, including your broker's website. Moving averages make it easy to recognize a support bounce or break within a trend, since you only need to watch the price move higher off of the moving average line or cross below it. Equally valid are trend lines drawn manually using the pattern of rising lows within the trend. Many traders use both moving average lines as well as their own drawn trend lines to watch for and track movements relating to trend support. This chart provides good examples of trend lines acting as support. Our first example covers a period of 3 months and represents a significant upward run. The occasional downturns in price quickly turned back to the upside after touching the trend line multiple times, as shown by the red 20-day moving average. Our second example provides a good look at a support bounce off of the intermediate trend as identified by the 50-day moving average in January. Example 3 provides another view of support using the 20-day moving average, while our last example uses the long-term trend as seen by the 200-day moving average as the catalyst for a final push to a new 52-week high. Note that in all 4 examples, we have provided manually drawn trend lines shown in green. These lines are significant not only for the bounces that occurred off of them, but also in their proximity to all 3 moving average lines. If you draw your own trend lines, make sure to use moving averages to check yourself. Your short-term trend line should match direction with and lie reasonably close to the 20-day moving average, and so on. If your trend lines don't match up reasonably with their moving average counterpart, you may have drawn your trend lines incorrectly, which can lead to faulty analysis in identifying future support levels. Along with trend support, being able to identify support pivots using previous price action will improve your ability to forecast the direction of a stock and trade more effectively. When looking at a price chart, remember that levels that have acted as support in the past will only be support if they are below the stock's current price. One of the precepts of technical analysis suggests that previous price patterns repeat themselves. In other words, previous support pivots often provide new support as the price cycles back to those levels. Along with anticipating bounces, using previous support can give additional clues to identify weakness in a stock. Just as a break below a trend line often indicates a reversal of trend, a break below support from previous price action usually signals further weakness and decline in price. Taking the time to identify as many levels of support as possible below a stock's current price will help you anticipate opportunities to trade in the direction of a downward trend. They can also be used as points for stop-loss orders to protect your capital from large losses when the price moves against your trade. This chart demonstrates the identification of support pivots using reversals on horizontal price points. This process is a simple matter of looking for a reversal from a price low. Although the pivots identified in December, May, and July acted as support at that time, since all three levels are above the current price, they would not be considered as support. On the other hand, the levels identified in March, April, and August do qualify as support pivots since they are below the stock's current price. In fact, April support pivots lie on nearly the same line as August, providing additional strength to the likelihood that the price could find support again in this price area should it begin to drop again. Using this level as a reference for a stop-loss order would be a reasonable strategy. With an understanding of how to identify and use support, you are ready to take the next step in analyzing a stock's pivot points, identifying and using resistance levels. In identifying resistance pivots, we examine resistance in depth and discuss how to use support and resistance levels together in a complete technical analysis of a stock's price.